Most people still look at Lemonade like a small insurance company with a nice app. Well, I think that is completely wrong. What Lemonade is building is the vertical ontology of insurance. So what does it mean? Customers, policies, claims, fraud, pricing, risk, service interaction, all mapped in one system that keeps learning. And after Q1, I think this is proved by the number, not one single number, but a set of metrics that confirm that the flywheel is working. So let's start with the big idea. Intelligence is getting a commodity. So open models get better and better, and inference cost should go lower and lower. So where is the actual edge that a company can have? It's not the model, it's not the intelligence, it's the domain map, it's the workflow, it's the proprietary data. And the ability to turn all of these, so to turn AI into action inside a specific industry. That is what I call a vertical ontology. And insurance is almost the perfect industry for this, because insurance is basically a machine for pricing uncertainty. So you need to understand the customer, the policy, the claim, the risk, the fraud signal, the precision pricing, the service interaction, and all of these things are connected. So if your system maps those objects better than competitors, you should underwrite better, serve customer better, automate more work, and improve faster over time. That is exactly where I think the Lemonade opportunity occurs. Annual dollar retention has been stable around 85% for a few quarters now. Yes, it came down from 88% in Q1 2024, but management is saying that that is mainly because of the continuing impact of cleaning the book in the home business. And there is no reason to do not trust them. And leading indicators actually confirm this version, because the App Store ranking, App Store ratings and Trustpilot ratings remain above 4. That is very strong if compared to incumbents and to peers. So that is not a broken customer experience. It's actually a quite strong customer experience. So that matters, because the retention story is not just about price, but it is even about customer experience. So happy customers will stay with Lemonade. The second point is efficiency. So IFP per employee keeps rising, and it is about to overtake Root Insurance. This is very important because Root has a much higher premium per policy. So Root should have a natural advantage on efficiency, same policies, higher premiums. And yeah, Lemonade is catching up. So to me, this is the AI operating leverage thesis showing up in the numbers. Then we have loss ratio. So loss ratio in Q1 was 62, which is healthy. And here, an important remark. I do not expect Lemonade to have the lowest loss ratio in the industry. That's not the point. The goal is to have the highest possible gross profit, and the management said multiple times that they are optimizing by gross profit. So it could mean that at a certain point it makes sense even to higher the loss ratio if that means lower, for instance, prices, get more customer, and increase the gross profit. That is very important to keep in mind. Of course, you need to have a healthy loss ratio, but we are there already at 62%. And this is why I track my rule of 40 metrics. It combines the trade-off between growth and underwriting quality. In Q1, Lemonade print at 69% on this metric. That is excellent. If they can maintain something close to this level, gross profit is going to explode. The third part is Lemonade Car. So management expect the car business to drive a lot of future growth. And then when I look at the same adjusted metric rule of 40 for this segment is actually even better. Even though we need to be careful here because of course car is still tiny compared to the rest of the business, but even in absolute terms. So still, I'm looking at this directionally, yet I'm looking at the trend most than the absolute number, and this is exactly what I want to see. If Lemonade can use the same AI-driven operating model in car insurance, then the addressable market becomes much bigger. And this is exactly where the long-term thesis gets very interesting. They will eventually insure autonomous agents, autonomous vehicles, autonomous objects, basically a new category of machine-driven risk. And that market could be even bigger than traditional insurance market. This is why Lemonade remain my highest conviction holding. My thesis is simple: growth with near zero marginal cost. If Lemonade can keep growing IFP around 30% for the foreseeable future while improving efficiency and maintaining healthy loss ratio, then operating leverage can be massive. And if over a decade, Lemonade captured even 5% of the US property and casualty market, auto insurance, and future autonomous object insurance, I think this can become a $1 trillion company. That sounds crazy, sure, but even multi-bagger sounds crazy before the number make it obvious. The question is not whether the stock is volatile. It is. The question is whether the business ontology is improving, and after Q1 my answer is yes. Conclusion is simple. Lemonade is not just an insurance company, it is trying to become the vertical ontology of insurance. Guys, still risky, still volatile, this is not financial advice. Now, if you want to see the full article, all the charts, my business ontology framework, and eventually even my 4D valuation model, 4-dimensional valuation model, the link is in the description.